Hi everyone, welcome to our channel, where we make complex topics simple and easy to understand. Today, we're diving into the world of insurance licensing by breaking down 72 key terms that you'll need to know to ace your insurance exam or simply understand how insurance works. Whether you're studying for your license or just curious, this video is for you. Let's get started. 1. Adverse selection. Adverse selection happens when people who are higher risk are more likely to buy insurance. For example, someone with health issues is more likely to seek health insurance. Insurance companies combat this by carefully evaluating applicants, a process called underwriting. 2. Age change. Age change is the date when an applicant's age is rounded up to the next birthday for premium calculations. Some insurers use the nearest birthday, while others use the last birthday. 3. Agent's report. This is a confidential report where the agent records personal observations about the applicant. It helps underwriters make informed decisions. 4. Applicant. The applicant is the person applying for the insurance policy. Usually, they're also the proposed insured, but not always. 5. Application. The application is the form filled out by the applicant. It provides the insurer with the information needed to decide whether to approve the policy. 6. Attending physician statement, APS. If an applicant has a medical condition, the insurer may request a statement from their doctor. The applicant must authorize this release of information. 7. Avocation. Avocation refers to hobbies. Some hobbies, like skydiving, increase risk and may require additional underwriting. 8. Backdating. Backdating makes the policy's effective date earlier than the application date to lower the applicant's age and premium. It's usually limited to 6 months. 9. Binding receipt, unconditional receipt. This receipt provides temporary coverage as soon as the application and initial premium are submitted. Coverage lasts until the insurer approves or declines the application. 10. Buyer's guide. This is a pamphlet that explains different types of insurance policies. Agents must provide it to help consumers make informed decisions. 11. Claims experience. This is the history of claims filed by an insured. A higher claims experience usually means higher premiums. 12. Community rating. Community rating bases premiums on the overall claims experience and healthcare costs in a specific area. 13. Conditional receipt. This receipt provides temporary coverage if the applicant meets certain conditions, like passing a medical exam. 14. Constructive delivery. This occurs when the insurer releases the policy for delivery, even if it hasn't been physically handed to the policyholder. 15. Consumer report. Investigative consumer report. This is a detailed background check on an applicant, including interviews with friends or neighbors. It helps insurers assess risk. 16. Counteroffer. If an insurer declines a standard policy but offers a higher premium policy instead, that's called a counteroffer. 17. Credit report. This report summarizes an applicant's credit history. Insurers use it to assess financial responsibility. 18. Declined risk. A declined risk is an applicant whose application was rejected by the insurer. 19. Delivery receipt. This receipt proves the policy was delivered to the policyholder. It starts the free look period. 20. Disclosure form. This form is required when replacing an existing policy with a new one. It helps consumers compare policies. 21. Earned premium. This is the portion of the premium that covers the elapsed part of the policy term. For example, if 3 months of a 12-month policy have passed, 25% of the premium is earned. 22. Effective date. This is the date when the policy's coverage begins. 23. Evidence of insurability. This is proof of an applicant's health and lifestyle required to qualify for coverage. 24. Expense factor. This is the portion of the premium that covers the insurer's operating costs, like commissions and overhead. 25. Fair Credit Reporting Act. This federal law allows insurers to obtain consumer reports, but requires them to inform applicants and provide the reporting agency's details if coverage is declined. 26. Field underwriter. This is the agent who completes the insurance application. 27. Field underwriting. This is the process where the agent evaluates risks and submits applications to the insurer. 28. Free look period. This is a period, usually 10 to 30 days, when the policyholder can cancel the policy and get a full refund. 29. Health insurance premium. The premium is calculated using the formula: morbidity, interest plus expenses. 30. Information and Privacy Protection Act. This law prohibits insurers from basing decisions solely on previous underwriting decisions. 31. Inspection receipt. This receipt allows the applicant to review the policy before buying it. It's mostly obsolete due to free look periods. 32. Interest. This is the income insurers earn from investing premiums. 33. Issue date. This is the date the insurer finalizes the policy. 34. Load. Load is another term for the expense factor. 35. Loading factor. Same as the expense factor. It's the cost added to the premium for expenses. 36. Medical Information Bureau. This organization collects medical data on insurance applicants for member companies. 37. Medical Report. This report provides additional underwriting information about an applicant's health. 38. Mode. Mode refers to the frequency of premium payments, like monthly or annually. 39. Moral hazard. This refers to habits or behaviors that increase risk, like excessive drinking or dishonesty. 40. Morbidity. This is the risk of suffering a disability or illness. 41. Non-medical. This refers to applications evaluated without a medical exam. 42. Outline of coverage. This document explains the policy's benefits and terms in simple language. 43. Payor. The payer is the person responsible for paying the premium. 44. Policy fee. This is a small fee charged by some insurers for issuing or maintaining a policy. 45. Policy summary. This summarizes the policy's key terms, like coverage and premiums. 46. Policy term. This is the period the policy remains in force, assuming premiums are paid. 47. Policyholder. The policyholder is the person who owns the policy and can exercise its rights. 48. Preferred risk. This is an applicant with a lower than average risk, often due to good health or lifestyle. 49. Premium. This is the payment required to keep the policy in force. 50. Premium mode. This refers to how often premiums are paid, like monthly or annually. 51. Premium receipt. This receipt proves the applicant paid the initial premium. 52. Proposed insured. This is the person whose life or health is being insured. 53. Rated policy. Rating up. This is a policy with a higher premium due to the applicant's higher risk. 54. Rated up policy. Same as a rated policy. Higher premiums for higher risk. 55. Rated up premium. This is the extra amount added to the standard premium for higher risk applicants. 56. Replacement. This is when a new policy replaces an existing one. Agents must provide a notice about this. 57. Representations. These are statements made by the applicant on the application. They must be accurate but don't have to be perfect. 58. Reserves. These are funds set aside to pay future claims. 59. Risk classification. This is the category an applicant is placed in based on their risk level. 60. Special class. This is an applicant who can't qualify for a standard policy, but may get one with a rider or higher premium. 61. Special questionnaire. This form gathers detailed information about high-risk activities like skydiving. 62. Standard risk. This is an applicant who meets the insurer's average risk standards. 63. Substandard risk, impaired risk. This is an applicant with higher than average risk, often due to health or lifestyle. 64. Statement of continued good health. This is a statement confirming the applicant's health hasn't changed since applying. 65. Temporary insurance agreement. Same as a binding receipt, it provides temporary coverage. 66. Trial application. This is an application submitted without the initial premium. It's not a binding offer. 67. Underwriter. This is the person who evaluates and classifies risks for the insurer. 68. Underwriting. This is the process of evaluating and classifying risks. 69. Unearned premium. This is the portion of the premium that hasn't yet been earned by the insurer. 70. Uninsurable. This describes a risk so high that the insurer can't cover it profitably. 71. USA Patriot Act. This law includes anti-terrorism and anti-money laundering provisions. 72. Warranties. These are statements on the application that must be absolutely true. Breaching a warranty can void the policy.
And there you have it, 72 key insurance terms explained.
If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more content like this. Good luck with your insurance licensing journey, and I'll see you in the next video.